A finance employee joins a video call. On screen, his CFO and a few familiar colleagues. They ask him to process an urgent confidential transfer. He does. 15 transfers, 5 Hong Kong bank accounts, $25 million. Gone in under a day, every face, every voice, AI generated, built from video calls and conference recordings the real executives didn't even know were being used against them. This isn't a movie plot. This already happened, and it's only the beginning. Welcome to AI Capital Code. This channel exists for one reason: to track exactly how artificial intelligence is reshaping money, who has it, who moves it, who protects it, and who's about to lose control of it if they're not paying attention. Today isn't about one tool or one trend. Today we're zooming out, past, present, future, so you can see exactly where this is headed and why it matters to you specifically. Whether you invest, run a business, work in finance, or just have a bank account, here's exactly how we are going to prove it. 3 real cases, one from the Pounding Man, one happening right now, and one that's already being built for the very near future. By the end of this video, you'll know exactly why this is your problem too. Case 1, the past. Start in 2012. Knight Capital, one of the largest trading firms on Wall Street, deployed a software update to its trading algorithm. One faulty piece of code went live on a single server. In 45 minutes, it executed 4 million unintended trades across 154 stocks. The company lost $440 million before anyone could pull the plug. It nearly went bankrupt before lunch. That was algorithmic finance before AI really understood anything. Fast, powerful, and catastrophically dumb the moment something went wrong. 5 years later, JPMorgan rolled out something very different. COIN, short for Contract Intelligence. Its job, read commercial loan agreements that used to take lawyers and loan officers 360,000 hours a year to review by hand. COIN does it in seconds. That's the real starting line. Not dramatic with dynamic, just a machine quietly doing a year of legal work before breakfast. That's case 1. Now let's look at what's happening right now. Case 2, the present. Fast forward to now. 56% of finance leaders say their teams already use AI day to day. And here's what should surprise you. It isn't specialized finance software leading that charge. It's general tools like ChatGPT, ahead of purpose-built finance platforms. On the productivity side, the numbers are real. Investment banks report automating up to 40% of research tasks. Some trading and portfolio teams have cut research time by as much as 83%. Fraud detection has improved just as fast. AI-driven systems are projected to save global banks over $9 billion a year by 2026, screening transactions at a scale no human team ever could. But, and this is the part most AI is amazing videos skip, the same technology cuts the other way. Remember the Hong Kong case from the opening? Not an isolated incident. Deepfake-related fraud losses have been climbing by triple digits year over year, and some industry estimates put global losses from AI-enabled fraud near $40 billion within the next 2 years. Even the success stories have an asterisk. Boston Consulting Group found the average return on AI investment in finance sits around just 10%, while most companies were targeting 20% or more. About a third of finance leaders say they have seen little measurable value so far. So here's the honest present. AI is already moving real money, catching real fraud and enabling real fraud faster than most companies and most individuals have built the judgment to keep up with. That's case 2. Now here's where this is headed next. Case 3, the future. Here's where it accelerates. It's that by the end of this year, 40% of business software will complete tasks like fraud detection and loan processing entirely on its own. No human clicking approve. In private equity, 95% of firms are already using or piloting agentic AI. Systems that don't just answer a question, they carry out entire multi-step processes unsupervised. And the job market is already shifting underneath this. A new role is emerging at some firms, informally called the reasoning quant, someone whose entire job is directing and auditing AI systems, not running the numbers by hand. This is the direction every part of finance is heading. Faster decisions, fewer humans in the loop, and a widening gap between people who understand how these systems work and people who are simply trusting them. Let's bring those three cases together. An algorithm with no judgment that lost $440 million in under an hour. A present where AI is saving banks billions while quietly enabling new kinds of fraud. And a future that won't even ask permission anymore. That's the arc. And here's exactly why it's your red alert today. This isn't a future trend anymore. It's already moving your money, your dough, your investments, and if you're not careful, your bank account, right now, today. The people getting hurt by this aren't uninformed because they're careless. They're uninformed because nobody told them how fast this moved. Consider this video warning. The good news, every advantage in this new landscape goes to the people who actually understand what's happening, not the ones reacting after the fact. That's what this channel is for. We're not here to hype AI, and we're not here to scare you for clicks. We're here to decode exactly what's real, what's risk, and what's opportunity, in plain language, backed by real data, every single week. Right after this, we're publishing our first deep dive. Will AI actually replace financial analysts? We pulled the real numbers. Links right there. Subscribe if you want to stay ahead of this instead of catching up to it later.